G'day and welcome to the Grow a Small Business Podcast. I'm your host, Troy Truen. Each week, we speak with an owner who has grown a business with 5 to 30 team members to something bigger. Diving into their numbers and unearthing the pain they've experienced, we explore what they did to overcome each barrier and what they would do differently from day one. Let's get into it. U Technologies. He's based in Sydney, Australia. Thanks for your time today, Steve.
Hey, Troy. Good to be here.
Let's start with how we know each other. Denise from your team at Zoom2U put us in touch. Thought you might be a great guest for us.
Yeah. So we're actively looking to talk on many podcasts. So it was, we came across yours and thought it would be a good one. And, I think we can share some of our stories and some of the journey of building of the different businesses I've done over the years. Yeah,
I'm looking forward to hearing about it. Fun fact for those people that love trivia nights, Australia's the highest listeners of podcasts in the world per capita. So it's 40% of anyone aged over 13 listens to one episode a week and 10% listen to 6 or 7 episodes a week, which is phenomenal.
Yeah, right. How good.
Well, tell our audience a bit about your business, what it does and how it makes money.
Yeah, cool. So we're a listed company on the ASX, which is Zoom2U Technologies. And so under the code of Z2U. And we've got 2 parts of our business, one being Zoom2U, which is our Zoom2U marketplace, which is essentially delivery, like an Uber-style delivery marketplace. And we look after lots of small businesses, as well as some really large corporates, in being able to help them with same-day delivery. And, essentially, customers go to our website, they place a booking, gets dispatched out to drivers who have an app on their phone who choose to accept or reject those bookings as they come through. And customers, can see the live location of the driver and the estimated arrival timing, being able to communicate with their driver. And so we started that back in 2014. As we evolved, we built our own technology platform to run Zoom2U. We had a number of customers that wanted to use that same technology inside of their own business. And so that evolved in us building a separate product called Locate2U, which is a SaaS platform. So it's a software product that we sell globally, essentially for companies that are looking to manage their own fleet of their own drivers. And it does things like route optimization, as well as providing that live tracking experience. So customers can see exactly, when your driver is actually arriving. And I guess the 2 things with those businesses that are similar is when I set out and building both with originally Zoom2U was, how do we solve the problem of a courier arriving and you don't know that they're arriving and ending up at the post office, and that frustrating experience of, going there and lining up to get your parcel. And I think we can solve that, and we're doing that through technology.
Oh, it's so fucking annoying when, they turn up. I've just literally gone around the corner to get a coffee. Straight post turns up, and there's a card, and I've got, now I've got to go down to the post office. Yeah. Solving a great problem there that takes out some of my, I only get rage a few instances. 1's on the road, 2's technology, and 3's when that happens.
Yeah, that happens. Exactly. Exactly. And I think it's not just like it affects delivery, but I think it actually affects a lot of type of businesses, and there's a lot of service businesses where you're waiting for the tradesperson to turn up. All of that can be solved, and can be solved by using technology.
Yeah, great. And I mean, it's been such a boom, particularly after COVID, but you started 9 years ago now. So a lot more online shopping, therefore a lot more deliveries going on. So you would have seen a big rise in demand.
Yeah, definitely. I mean, particularly through COVID, we had a number of our sort of larger enterprise customers where their warehouses were shut down because they didn't have enough staff, or there was a COVID outbreak, and they were able to convert their retail stores into doing micro warehouses to do delivery. And so, we saw a big spike in volume through that period. And so initially, like everyone, we weren't sure what was going to happen with all the lockdowns and whatnot. But for us, we were one of the lucky businesses that actually did really well through that period.
Yep. And I've got to ask, did you get the halo effect like the company I think they're on the NASDAQ, the tech industry in the US, when Zoom started to really skyrocket in the US? I'm sure you would have heard of this. There was
definitely.
Another company that had a similar name on the NASDAQ, but it wasn't Zoom, the video. And people were accidentally investing in them, and their shares tripled or something.
Yeah, no, look, we weren't listed at that stage when that happened. So we listed September 21. And which was it was in the later stages of COVID, and we were actually still in lockdown during that period. So we managed to list our company during a lockdown, which was definitely interesting.
Yeah, great. Well, how did you start out?
I guess going back, I started my first business when I was 19, and it was an IT support company, helping lots of small businesses fix computers. I originally went to university, dropped out after probably about 6 months, and I was studying business and IT. And yeah, I just really wanted to start doing things and be running a business. And yeah, that sort of led me to start working in a small business. That IT business grew over sort of probably about eight or 9 years. We had about 15 staff in that business and lots of companies that we were helping provide IT support. And what I learned in that business was having systems and processes were really, really important. And we didn't have any of those things. I didn't understand any of that sort of stuff. And also having software could actually make a huge impact to your business and how it actually operates. And this was sort of back in the early 2000s. And software like it exists today didn't exist then. It was always desktop-based software, was always very expensive. Simply having software to actually manage all of your bookings and those sort of things was really, really challenging. We had all these technicians that were running around Sydney fixing computers. We weren't invoicing customers on time. The cash flow was really bad. It was a very challenging business to actually scale and grow. And so I learned a lot through that business. But what I also learned was software was a really good thing, and software can help change this. And this was just before the iPhone and smartphones were actually coming out. And so I switched and I got rid of that business. I sold a little bit of it off, got rid of all the staff, and I started building software and actually started engaging in companies or people in India to help me with building software. And we started with building sort of ad hoc projects for different companies and just charging them a fee to do that. And then eventually started building an actual product, which was a job management and scheduling application called Connect to Field. And so I did that for about 4 or 5 years. In 2013, it got acquired by a company out of the US called Fleetmatics, which is now owned by Verizon. So they were listed at the time. And so, I worked with them for about 6 months. It was quite challenging going from a relatively lean business where we were fast moving and growing to a really large organization that had about 500 or 600 people. And so I decided to part ways. And I didn't really know what I was going to do next, but I wanted to start my next thing. I had a couple of months off, but I got bored very quickly.
As you do. Yep.
Yeah. And I mean, it's interesting. Everyone sort of dreams of like the retirement. I'm like, well, it was all my friends were still working. So it's not like, you get bored very quickly, and I don't think I'll ever retire. I really enjoy, building businesses.
Yeah. There's only so many pina coladas you can drink on the beach.
That's right.
Well, sorry, just on the IT support. That's interesting. Because I moved to London in 2007. I think bought into a small IT support company there. I had 2 business partners, 2 senior engineers. Asked one to leave after 8 months because he couldn't fill out a timesheet because he's got ADHD, and he's a great guy, great technician. But I said, just get another job in the industry, but where you don't fill out a timesheet. We stacked the juniors on, got to about 20 people in a bit over 3 years. But like you, on my way back to Australia, I was, we'd had a few HR issues near the end, and my marriage had broken down, so I was moving back, and I wanted to move out of just selling time, professional services. So I've moved into a product, which I would argue is a bit more of a sexier product than yours going SaaS. I went into whiskey. So it's great, though, to be able to leverage something like the SaaS with systems online or, products, and you got less people to have to pitch. Yeah.
Yeah. I mean, I would always now typically focus on selling a product rather than being able to sell a time-based service. It's very, very hard to scale, and you're reliant on finding good people, and that's really hard. And you're dealing with interactions, whereas if you can systemize a business and reliant on selling a product over and over again, that's where you can get to real scale. And in this instance, doing that on a global market can make a lot of sense.
Yeah. Sorry, I cut you off. 2013, you had 6 months holiday, and then you're back.
No, so I worked for the business for 6 months, took a couple of months off, and I was going through lots of different ideas of what next I could do. And then we'd moved into a new place and we're ordering all these things online, and I kept on missing the courier. And it was actually the time where I was having a coffee with a previous investor, and the courier was like ringing my phone. I'm like, this is a brand new phone number. No one should know it. I don't know who's calling me. And it turns out it was a courier, and he was super annoyed that I wasn't at home. And this is the 5th time he tried to deliver some furniture to us. And I'm like, this is a really bad experience for me as the customer, but it's a really bad experience for the driver. And if you could use technology to connect the two parties together, you could actually make this experience much better.
But sorry, they didn't even let you know the time they were going to be there?
No, nothing.
Oh, geez. Yeah.
And it still happens today. Like it's, lots of courier companies still don't tell you when they're actually coming up. And so with that, I started doing a bit of research, and I actually built a website, and I said, this is what we're doing. And I started building some AdWords to that. And we weren't actually operating, but I wanted to see how much interest I could actually get from the AdWords. And I made the site look like it all operated and worked. And then we started getting inquiries. And then I'd ring them up and it's like, sorry, we're not actually operating, but what were you looking for? And I was almost just doing some market research to understand why they'd gone to Google and found us. And so through that process, I was understanding that there was actually demand for what we were looking for. There was lots of small businesses. We could acquire customers through AdWords and do that cost effectively. And so then it was probably like a month later, we launched with a very basic version of what we've built today. And then, we were sitting there a Sunday afternoon and a live booking came through. And I was like, okay, now we're starting.
Great.
So it's been an interesting ride. We've gone from, in that instance, we were building Zoom to You, which is a 2-sided marketplace. So you're having to build customers at the same time you're trying to build a driver network. And in that first, year is really, really challenging because those two things never match. Like you always have too many drivers or too many customers, and matching those together is really, really challenging. Whereas today, we've got over that hump and we've got to some scale. And so now it works really, really well.
So it sounds like you would have had a rollout strategy similar to Brian Clayton, who I had on episode 63. Well, 3 years ago now. He had a lawn mowing business out of uni or out of high school. He started, I think, went to uni and just kept mowing lawns, got to about 110 team members and then sold it. And then about 9 years ago now, started up Green Pay, which is like the Uber for lawn mowing.
Okay.
Doing about 20 million a year when I had him on the cast, I think. But similar challenge, you've got to build up both sides of that market in a geographic area. So I assume you started in Sydney and then bounced.
That's right. Correct. Yeah. So we started Sydney, and now we're pretty much, in most capital cities across Australia, and lots of small businesses, consumers use us, but also some large enterprises like Nespresso, Bunnings, DHL, and many others.
Yeah, great. Okay, and so that was 2014. You started. How old were you 9 years ago?
I'm 42 today.
33.
33.
And do you have some key numbers you can share to illustrate the growth of the business over the 9 years?
Yeah, I mean, so we've processed, I think it's like over 3 million deliveries since we started. There's thousands of drivers that are on the platform, and drivers come and go, but there's always decent demand in terms of bookings that are going through now. In terms of we look at, there's two markers. Obviously, there's revenue. And we also have this thing called GMV, which is the total value of the delivery transaction. So not the goods that we sell, but actually the delivery transaction. So if it's a $20 delivery, we call that GMV. Of that $20, we keep typically about 20% of that, which is our actual revenue. So across, now we're about a $4 million business annually. GMV is round about sort of the $15 million a year, thereabouts, and growing each year. So it's gone from nothing to something over a relatively short period of time.
That's fantastic. And how many team members did you start with, and where are you at now? Full-time equivalent?
Yeah, so it was me initially, and I was on the phones speaking to drivers, onboarding drivers day one. Pretty quickly, then I hired our initial sort of person who was helping on customer service, and that was probably for about the first 6 months. It was me and her, and that was, really trying to make sure that we understood the systems and processes and really tweaking the platform that we were building. And so it was very challenging because we were all involved in operations, and really scaling up the business quite quickly. Today, we're across both of our businesses. We're about 85 people. some portion of that is in Australia, a portion of that is also in the Philippines, and also in India and South Africa, as we sell into to global markets.
Great. And you got expansion plans outside of Australia?
For the core Zoom to You delivery business, no, we're going to keep that running in Australia, and there's a big enough opportunity here locally. But for Locate to You, we're selling that globally. We've already got customers throughout the US and other markets. So that, yeah, there's a big opportunity globally with Locate to You.
Yeah, maybe give a shout out to the locations in Australia, Zoom to Use, because I'm sure there's a lot of business owners. I know a few of the businesses I sit on boards of or chair definitely have been trying to solve this problem for a while. So what cities?
Yeah, I mean, every city except for we're not in Northern Territory yet. We're not in Tasmania yet.
Oh, right. Well, there's two businesses down here immediately. I know that would love to use your product.
But yeah, look, it's definitely. I think we're actually seeing a bit of demand coming, actually, particularly in Tasmania. So yeah, we may see that change quickly.
When was the moment you felt like you had succeeded?
I mean, I think, there's different stages throughout building a business. It was pretty exciting when I sold my last business, and yeah, I think that was a great experience. Having spent 3 or 4 years in building a business, you get an email the one day or a LinkedIn message from someone out of the US that's actually interested in buying your business, and you go through. Initially they're actually looking at. They approached me on the basis they're looking at trying to resell our product. But in fact, they were just doing their market research for looking for something to acquire. And yeah, the one day they had a call and they said, look, we're actually wanting to buy your business. And I'm going to send you a letter tomorrow talking around what the terms of that deal is going to look like. And so I think receiving that letter, it was early in the morning. And that was a pretty good moment. And yeah, like that really felt like, I'd achieved building something that someone else really wanted to own. But then, yeah, I think you get through that and you now on to the next thing and to the next thing. And so I think your ideas of success, I think, change as you start to grow and evolve and your businesses start to build as well.
Yeah, well, that's the next question. What does success look like to you now?
Look, having sold a business and now starting a new one, it's very hard starting businesses. And so I don't necessarily want to sell this business. I listed it purposely because I want to run this for a long period of time. And if I'm like Warren Buffett at 90 still running this business, I'll be very happy doing that. I really enjoy building the business, and I think being part of a listed company is exciting. Being able to do that and building that into a substantial business into the future. And so for me, it's I think we've got building a great product and customers love what we're building. It's now around like how do we solve the problem of people turning up to people's homes and you don't know from a delivery or from a service point of view, and doing that at a global scale. And so it's distribution of our product across the world. And so when I can see that we're starting to get that serious penetration globally, then I think I'll feel like we've achieved something.
Yep. And the company that you sold, how big did you get to the team to before you got acquired?
Yeah, we were still pretty small. So I think we were, 10 or 15 people.
Yep.
So it was still very early on in the journey of that business. We were making, we were growing and we were doing really well. We had some investors. We'd raised one round of capital. We'd raised about 800K in capital. And yeah, like it was, but it was in those days, the early 2010, 12, raising capital was, just didn't exist in Australia. Like you didn't have the venture capital companies that like you have today. So it was a lot more challenging to raise capital. We'd raised some money from a public company, Reckon, they're still listed today. And I think they put in about 600K, but yeah, it was pretty challenging raising that money back in those days.
Yep. And is it public? Are you able to say what figure the business got bought for?
You can search for it, but I can't say what it is.
All right. And so your listed revenue is about 4 million a year.
Yeah.
It's quite expensive though, isn't it? It's like $250,000 to $500,000 a year to stay listed on this stock exchange.
Not necessarily. I mean, it is expensive to be listed, and we're definitely a micro cap. But we see there's opportunity for us to do acquisitions to scale up the business. And I think if you don't have those plans to really grow rapidly, then you wouldn't do it. But yeah, we've got some plans to do that. I think it's making sure that you're very careful around keeping lean, even though you're a public company, minimizing your costs and expenditure. You've got costs of being listed in terms of fees to the ASX, and you've got some, generally insurance, and you've got some auditing fees and that sort of stuff. But you can actually manage that. It's still expensive, but you can manage it to make sure you are keeping it as lean as possible.
Yep. Number one thing you'd recommend to marketing a fast-growing business?
Look, I think ultimately it comes down to how do you acquire customers. Building a product is easy. Well, it's not easy, but that's actually the easy part of building a business. Ultimately, the most challenging thing I think is actually how do you acquire customers and acquiring customers efficiently. There's been lots of companies that have been able to raise lots and lots of money over time, and then they're able to spend that money on marketing and advertising. But those days, I think, are gone, and I think that's a lot more challenging today in today's market, and making sure that you've got an efficient way of being able to acquire customers. And so you're doing things like, search optimization, building content, all those things that take a long time, that actually ultimately builds you a moat into the future. So you're not relying on just spending money with Facebook ads and others.
So I assume you would hawk over the key figures like lifetime value, LTV, and CAC, customer acquisition cost, which are very important, and that ratio, minimum 3-to-1.
Yeah, look, definitely. But I think those numbers will always improve over time. And so I think in the early days, you actually need a bit of momentum. And so you actually need to get going. You need to get customers on board. And even if you end up losing money in those early days, that's actually okay. So I wouldn't be too focused on that in the early days, because that early traction of getting those testimonials onto your website and people talking and using your product and giving you feedback is really valuable. Over time, then you want to make sure that, obviously those things actually make a lot of sense. And if you're spending X dollars, then those are going to result in more dollars into the future. And, how long is your return on investment? Is it going to take you 3 months, 2 months, or is it going to take you 2 years to get that return? I guess what's unknown with a lot of these SaaS type products where it's a monthly subscription is what is the lifetime value of that customer? Is it 2 years, or is it 10 years, or is it 20 years? And if you keep evolving your product, it may be that it's substantially longer.
Yeah. And you use Net Promoter Score. What what your number is?
Yeah. So particularly in the Zoom to You business, where it's very transactional, one of the things I think the courier industry in general has been very poor at sort of making sure that the people that are receiving their parcels have a good experience. And that's primarily because there's so much volume that goes through these businesses. It's very hard, and it's very hard to know what the performance is like without having the technology. And so one of the things that we rolled out in the very early days was every time a delivery gets complete, we send the customer a message via email or SMS, and we ask for a rating, and it's a thumbs up or thumbs down. And so we can understand whether they're happy or not happy. And particularly in delivery, that works really well, because you've either received the parcel or you haven't. If you haven't, then why haven't you, and how do we fix that, and do that really quickly?
Yeah.
So we survey. So we do that, and that's one of our ways of measuring success of a customer. And I think that works really well. But then we also do the Net Promoter Score. We're in the 50s for that. And so I think a big part of that is around that thumbs up or thumbs down. If someone's unhappy, we fix it, and we can do that quickly, because ultimately in the Zoom to You business, you're relying on a person that's going to deliver that parcel, and humans make mistakes. And so, being able to know when a parcel's been delivered to the wrong location is really, really important.
Yep.
And if you look at product review and you do a search for Zoom to You, we're the highest rated courier company that's listed there, and we've won the award there for, I think it's like the last 4 or 5 years now.
Oh, well done! Congratulations.
Yeah. And you can see the reviews there from customers. It's not just people entering in a 5-star review. You can actually see their comments that they've added. People uploading photographs of things being delivered. So it's good to see and speak about specific drivers that they've engaged with.
That's good. And for the audience, Net Promoter Score is not a percentage; it's a positive or a negative. And I've written a blog post on how it works. I think McKinsey or Bain created it in the 90s. It's how likely are you to recommend us to a friend or a colleague between 0 and 10, not 1 and 10. But getting into the 50s, mate, that is amazing. It's really hard to do, especially consistently. So well done to you and the team.
Yeah. No, it is. It's one of those things that is very, very challenging to make that happen.
Yeah, we'll link through to that blog post I wrote on Net Promoter Score on these show notes. Anything else on funding your business or businesses? You mentioned you had some angels and etc. And obviously listed.
Yeah. So we've gone through a number of rounds of funding. And when I started Zoom to You, what I was able to do was some of the money that I had made from my previous business in selling connector field, I was able to roll that into the Zoom to You business. And there's some tax advantages in doing that. Can't remember exactly what it was, but there is some real advantages in the government sort of incentivizing you to keep on going and rolling that into a new business, which is something to always remember. So I put in sort of that first bit of capital and sort of gave myself a limit of how much I was going to roll in. And within a year, I was like, okay, I need to start raising some money, and then started looking for essentially some high net worth investors to put some money in. And so by that stage, I had a little bit of a network, so I was able to use that network, and then they introduce you to other people, and then eventually you're able to raise that round of money. But it definitely wasn't. I thought it would be easier having just had a successful exit. It definitely wasn't easy. It still took some time. And I think it's just been, everything in business is like just being really persistent, and it's actually meeting the people, the investors that actually understood what we were doing and the problem that we were solving. And as soon as I met with an investor who actually understood the problem, then they actually got it and like, yeah, I'm happy to write a check. And the writing of the check was very quick. And so initially, I think we raised was about 800K thereabouts. And then since then we've raised many millions of dollars since then through different rounds of capital. And then at our IPO in September, we raised about $8 million at IPO.
Great. Fantastic. If you were a startup today with plenty of funding, would you go into your industry?
Yeah, I would. Yeah, definitely. I think it's definitely there's huge amounts of opportunity in this space, and it's a big problem that needs to be solved. And there's a number of reasons. Like one, it's better for customers, and that customer experience is important. But there's also, a green element to, courier companies and delivery companies turning up when the person's not home, and it's just so inefficient. And if there was a number that if people knew of what that number of inefficiency was, it would just be staggering at a global level. And I think we can solve that through technology, and I think we can do that. That's not that complicated to do.
Can you outline the most stressful point in your small business growth journey so our audience can learn from it?
Yeah, look, I think there's, funding is always challenging. And so I think it's, there was a couple of instances, particularly in the early days of running my IT support business, where I wasn't on top of the numbers as well as I should have been, and cash flow. Obviously, cash flow is really important. And, having a process in place where you're actively looking at your numbers on a weekly basis, and particularly on a monthly basis, and seeing exactly how you're traveling. And so there's definitely times where we got turned up and I was like, shit, there's no money. What's happening here? And why isn't it? Because we've been so busy, and you haven't sent out the invoices, and having systems and processes to make sure you're actually doing that is really important. And so today, like in our business, that we've obviously got teams of people that manage this sort of stuff, and we look at the reporting and see these things happening on a live basis. But that for me was probably one of the biggest things. And then the second thing was, we went through a challenging audit with the ATO at one stage through Zoom to You, and that was, I'd never want to have a fight with the ATO. It was particularly challenging, and I learned a lot through that. A couple of things around, where you get advice in terms of legal advice. Barrister opinions are very, very useful. And barristers, I spent a lot of time with lawyers over my time. Lawyers can be great, but then actually the people that actually end up in court are the barristers, and the barristers are actually the ones that know the most about the law. And often you can engage a barrister directly. And that's super. I've found that really, really valuable now, that I often will engage a barrister to assist with anything that's, there could be a possible issue into the future, is knowing that you've had some really strong advice. And so legal advice is always significantly cheaper getting that advice before you need that advice. And before it turns into a problem, if you can solve it before it becomes a problem, that's much, much better. And so, that experience has really taught me that. And been really active around looking for potential issues into the future.
What area in business you feel you've had to work on the most to add the greatest value?
Sales and marketing. I spend a lot of my time in understanding how we're going to get customers and how we're going to do that efficiently, and then how we're going to communicate our value proposition to our customers so they can see what we're building and understand the benefits that we can actually assist in their business. And so, yeah, I think that's in every business, that's probably the biggest thing that companies need to solve, particularly if you're an early stage company. If you're a large brand and you've already got some, you've been around for a long time, it's very easy to go and sell a product when you've got that large brand behind you. But if you don't have that brand, you've got to have some really good messaging and really efficient ways of acquiring customers.
What have you enjoyed the least about managing fast growth?
That's a good question. I think, I really enjoy it. There's obviously times where it's challenging, where you don't hit the numbers you're wanting to hit. There's always balls that you're juggling and you're running multiple different things at different times. But yeah, I enjoy that. It's exciting, things change from week to week. So I enjoy the fast-paced nature of it. I think when I look back, it's what I least enjoyed was probably when after I got acquired and I was part of this large organization, and I had no idea, I didn't expect it was going to be as slow moving as it was. And so that was probably from going from running this business and everyone involved and having a team morale around, growing and building this small business into a large business, and suddenly that disappeared overnight. That was pretty challenging to go through. And then leaving, you left the business, but then you also left all the people behind that business. And so suddenly you're like, okay, well now what next? And so I think that was pretty challenging time period.
What do you love most about growing a small business?
I think it's the impact that you can have on other businesses is really cool, to be able to build a product and then go inside of a business and actually see that product being used and the impact it's having for that business. And that you can build something here in Australia and be selling that to, someone on the other side of the world. And yeah, it's having a big impact on how they're actually operating. I think historically everyone thought you had to be in Silicon Valley to build a big startup and technology, and you don't have to do that anymore. You can be here. You can have all your remote team working and be able to sell anywhere in the world.
What has been the biggest mindset shift for you in your small business growth journey?
I think in the early days, working on your business rather than inside your business is super important. And so sometimes it makes sense to switch between those and get involved in the detail, but it's getting involved in the detail to understand what the process needs to look like, and so you don't have to be involved in that detail. And that happened many years ago, but that was really a critical stage of seeing the business actually grow from just being me to scaling upwards. And I think that's really important. And I think having the right people inside your business around you to execute on those things and help you with those things is really important. And sometimes when things are really challenging, sometimes it might be that you've got the wrong person in that role for whatever reason. And it's always hard moving that person on, but it will, you'll look back on that and you generally I've never regretted moving a person on.
Yeah, it's always tough, the timing, and obviously just the process of exiting someone. It's not much, but sometimes has to be done, especially business partners. They're the hardest.
Correct. Yeah, definitely.
The number one habit you think a small business owner needs to develop and maintain?
I think being persistent and not giving up is really, really important. It's really hard building a business, and you're going to get lots of no's, and you're going to get lots of people saying that this isn't going to work. And it's having a really clear vision on what you're actually building and where you're heading, because you're going to need that when you go through those challenging times, and when everything looks like it's not going to work. You need to be really clear on what you're doing. And yeah, being able to be really resilient around that is really important. Without having that, I think you'll be in for a year or 2 years and then you'll give up. Then you've got to have the resilience to actually get through that and make sure that you're going to make the hard decisions to make sure the business is going to be successful.
Yep. Yeah, totally agree. Want to become the best manager you can be? Check out our Kick-Ass Manager course at growasmallbusiness.com. Do the course, then add your fellow managers for no extra cost. Join the 30%. 70% of people quit their job because of their manager. Can you talk to how you've added people to the team, some wins, mistakes, and advice for those listening? I mean, in this business, you've now up to around 85 team members. And the other businesses, you've got a lot of experience hiring people and keeping them.
Yeah. Having one of the things I'd be very careful about doing today would be hiring someone because of the company that they came from previously. And it's sort of like you look at the brand that they've been at, and they're like, oh my God, this is a multi-billion-dollar business. This person must have heaps of experience. And you hire them, and then suddenly you realize they don't have that experience that you actually need. I think it's been really careful around that. And so I would be more inclined to hire someone who's probably more junior, who's more hungry, who's got, the willingness to actually do what you need them to actually do, than hiring the person who's been in that corporate role for a longer period of time. And I heard, there was a saying of, I think it was bookings.com, I think it was, and they spoke about, the person that scaled that business in a particular market who did that for 5 years is not the person to actually start doing that again in another new business, because they've actually gone through that. They're not hungry enough, because it's really hard in the early days of scaling up. And so having that person who is really hungry to do that is really important. And just because they've done it before doesn't mean necessarily they're right to do it again, because they may not be interested in doing it again, or they may say they are, but they may not be willing to put the work in that's required to do that again.
Yeah, that's a really good point. As is, you're saying the risk around getting someone from a very large business coming into a small business. You've also got that very different mindset and cultural, a big business down to small business. They're very, very different things. So you've got that risk. Yeah.
Yeah. So I would be very careful around hiring someone from a big business. It's very different walking into a small business that's fast moving, lots of things that are happening. You don't have an HR department, you don't have a full-time legal department. They don't have, the things that they're used to having inside of it. And suddenly, they're having to go and find where the paper is for the printer, those types of things.
Yeah. What are some of the things you recommend to building a sustainable and kick-ass culture to help with the growth?
Yeah. So I think it's easier to do when you're a smaller company, because you're the underdog of that industry, and you're building something, and so people can be really attracted to that. And so as long as you're attracting those people who want to be part of the building of something, I think that builds the culture inside of the business that you're building. And so I think that's an easy thing to do. And I've never really had an issue with building that culture of those people. Like sometimes you'll get people that join that don't fit that, but then it stands out pretty clearly that they don't fit that culture. And then you have to make the difficult decisions in moving them on quickly. And then, doing things like team events, those definitely make a lot of difference. And making sure you do schedule in times to do that, and taking the time out, and going out Friday night drinks and those types of things, they definitely do help in engaging with people. But ultimately, you want to be hiring people that are engaged in a mission, and everyone's clear on what that mission is. And then making sure that you're communicating where we are in the path of going there. And if there are things that we're having challenges with, or we're having success, that we're talking around that on a regular basis.
Tell our audience how you've handled balance.
Look, I think it's hard to have balance when you're building a high growth company. I think it's accepting of that fact. Like you don't want to burn out, and so every person is different, and I think every person has a different way of managing it. I think if you're building a business that you are enjoying building, you've got good people around you, that makes it much easier to continue working in the day-to-day. And so you can be really passionate about it and not feel the burnout. Whereas if you're working in less hours, but you're in a corporate environment that you don't actually enjoy, I think you're more likely to have the burnout in an environment like that.
Yeah.
So I think it's important that you're doing something you enjoy, good people around you, and then, making sure that you do have time out. I typically don't work weekends. I will work some night times, and I'll come back, go home, spend time with the family. and then come back to the office and do some work. But that's just because I enjoy what I do, and I find that I operate better sometimes at night time. So different people work in different ways. Other people get up super early in the morning, and that's how they do it. So I think it's finding what works for you, and making sure including exercise inside of your routine. That exercise is a big thing, and just making sure that becomes like, you've got a set time when you're doing that, and that becomes a scheduled appointment as part of, you running of your business. I think that's important.
How much professional development have you invested in yourself?
Look, a fair bit, and I think there's things around, making sure, I don't know, having a personal trainer, those types of things to keep you on the exercise side of things. But then there's also professional coaches and whatnot. But I also think it's having a good network of people that have actually done these things before. And I've been quite fortunate that I've managed to meet people along the way that have been really experienced, that I didn't have to pay the money to assist in what I was doing, but they were actually willing to meet with me and spend time. And some of those people have become investors in the business. And there'd be people that I could ring and say, hey, this is what's happening right now. What would you do in this instance? I think that's really, really important in having those, seasoned people who have been through this before, that maybe at the stage of their life where they're just sitting on boards and they're investing in other companies, and tapping them for advice. But I think it's also being careful around always taking that advice. I think it's good to listen to that advice and understand it, but ultimately you're the person that's sitting in this business day in, day out. You understand the market that you're operating, and you understand the people that you're working with. And so sometimes, making the decision on your own is also important, but learning from others is also. So it's just a balancing act of those things.
So you'd call them mentors that you've had then?
Yeah, definitely.
Yep. Have you had any coaches along the way?
I have. I probably haven't had a huge amount of success.
Yeah.
And probably in the early days, when I was younger, in my 20s, I went through a couple of different coaches, and in some instances, some of their advice was quite poor. And that sort of, I guess, taught me around, trusting in what I was doing and building, and that ultimately I was the one that was inside this business day in, day out that knew the most. And so, but I think it varies. Like, if you find the right coach, then that can be very different. I think it's just, making sure that you really understand the decisions that you're making.
And I assume because you're listed, you've got a board of directors. How often do you meet? How big's the board? And do you have a chair or any independents on the board?
Yeah, we do. So we've got 3 independent directors. Myself and my CFO are on the board separately, so we're executives. And we meet typically every 2 months, sometimes more often. But then there'll be other informal communication that happens, talking around, whatever might be happening at the point in time. And in my last business, I also had a board. And in fact, pretty much when I started raising money on the first round of capital inside of Zoom2U, we established a board. It was small. It was me and 1 or 2 others. But I think having that rigor around your business adds lots of value, because it means that every month or every 2 months you're stopping and going, okay, what did we do historically, and how did we actually perform, and then what are we going to do into the future? And so it provides you with some really great guidelines on making sure that you're actually stopping and thinking about your business and working on it rather than inside on the day-to-day functions. So I really like having a board. I like stopping and spending some time actually recording what we actually did, and then what we're actually working on in the future, and where are the areas of challenge, and then hearing from them around areas where they might be concerned about what we're doing, or questioning, or saying, yeah, you're doing a great job on this particular area. I think it's really valuable.
Yeah, no, I agree. I sit on 5 boards, so I'm not going to disagree with you there.
Yeah.
Now, you're one of the few we've had on, Steve, that's exited a business. You've done a few exits now. Any advice for our audience that may be thinking about exiting one day?
Yeah, I mean, I think the biggest thing I learned through that process, which I didn't know beforehand, was having audited accounts is super valuable. No matter what, any business that I start, I would always have the accounts audited. Because if for some reason someone does knock on your door and wants to acquire you, that process of you having your accounts all audited means that you can have that deal done in a couple of months.
Yeah.
And so being really organized on your accounts is really, really important. Making sure that, you've got documented shareholder agreements and all that sort of stuff around the administration of your business is really well documented, is really important. And, keeping a register of the contracts that you've engaged with, all those things around how you're actually operating, making sure that that is really organized. Post that acquisition, what I found out was one of the reasons why they felt so comfortable in going ahead with the deal is because we were as organized as we were. And so every time they asked a question, we're like, here you go, here's the document. And we were able to provide that really, really quickly. And so, when they acquired us, they actually never came to Australia. It was all done
Really?
online.
Wow.
They never met us. It was all done. And it was done in a matter of like 6 weeks. And a big part of that was because we were just so organized in how we did that. I flew to Ireland. Part of their technology office was there. And so I spent a week there. But yeah, that was the rest of it was all done remotely, and being organized and having accounts that were audited made a big, big difference. And you don't have to spend large amounts of money on getting the accounts audited. You can go to a small suburban audit firm that will audit it, and it won't cost you a huge amount of money.
Yeah, I was going to say that it doesn't actually cost that much to get your accounts audited. So I never thought about that. It's a really good point. If someone's thinking about exiting in a few years, then get last year's accounts audited, and from now on. Yeah, that's a really good point, Steve. Thank you. All right, Steve, we're on our final 5 questions. What do you think is the hardest thing in growing a small business?
Definitely getting customers. Yeah, finding customers and keeping customers. Like, you've got to build an engine that's going to deliver you customers on a regular basis where you're not having to pay for those customers. Like, you're spending money on Facebook ads or AdWords.
Favorite business book which has helped you the most?
There's actually a book called Super Pumped. It's the battle of for Uber. And for me, it was really interesting because it was a book on the story of Uber, and there's now a global business that's enormous, and everything that was involved in actually building that business and the level of detail that it went into, it was quite amazing. And so for me, it probably related because I was building Zoom to You, and it's a similar sort of marketplace. But yeah, it's a really good book, and it's a really good story of a business that went from nothing to something massive, and then a founder falling out and leaving that business. So it's a great read.
Any great podcasts or online learning tools you use for your own professional development?
There's a good podcast that I'm going to have to, which is run by Reid Hoffman, who was the founder of LinkedIn.
Yes.
Interviews a number of really great people.
It's about scaling up or something, isn't it?
Yeah, it is. Yeah.
No, the Masters of Scale. There we go.
That's it.
Yep. One tool you'd recommend to help grow a small business?
The one tool I'm using a lot of at the moment is Loom. And so it's just an internal tool that you use to record something that you're actually doing. And that could be something that you can send to a customer on, this is how something actually works, or it could just be an internal tool that you're using to communicate with other team members. And so it's basically this terminology of like having asynchronous meetings. And so you're having a meeting with someone, but not at the exact same time, and being able to send them that link of that recording. It is a massive efficiency time boost. It saves huge amounts of time.
No, great. I didn't realize. Yeah, of course you could use Loom like that. Most people use it just to record their screen for training materials. That's great.
Yeah. But yeah, using it for meetings and recording it and sending it to someone like a developer saying, hey, make this change, or a graphic designer, or explaining how something actually works inside of your business, it suddenly makes you become a lot more scalable. And so our onboarding material for like when someone new starts in a particular area, we are going through the process of recording the Loom videos. And so then they've got this manual of everything that we actually operate and do. And then we spend more time talking around questions and details rather than the basics of how we actually operate. And it also means that they can go at their different speed. And so if they're understanding it, they can speed it up, or if they need to slow it down, they can slow it down and take more time to learn.
Finally, my favorite question. What would you tell yourself on day one of starting out?
It's going to take a lot longer than you think.
Have you heard of the rule of 4x2?
No.
Oh, when I was living in London, a VC was talking to the crowd about, he obviously gets hit up for a lot of money from entrepreneurs, and he's got this rule of 4x2, which he hits them with, which means it's either going to take you 4 times as long and twice as much, or take twice as long and cost 4 times as much. The only difference is you get to choose which path.
Yeah, exactly. Exactly. But it's good to know that. I think it's knowing that you've got to be really resilient through the process, and you can't be thinking about, I'm going to make some quick money over a year or 2 years. You've got to really be engaged in the problem that you're solving. And if you do that, then it'll be fine because you can get through any period.
Great. Thank you very much for your time today, Steve. I've really enjoyed our chat. Congratulations on your business career, and 3 businesses now so far, and exiting 2 of those, growing this current one from 1 to 85 team members, 4 million top line, listed on the ASX. Well done to you and the team.
Yeah, thanks, Troy. It's been great chatting.
That's it. Thanks for listening. Please leave a review in iTunes or whatever platform you listen to us on. It means more small business owners will find our cast and help people with their business growth journey.